Every mediocre trade you take costs you more than the risk you put on it. It costs you attention. It costs you emotional energy. It costs you capital that could have been available for the big opportunity. But here's what nobody tells you. It also costs you the trade itself. Because while you're managing 5 small positions that are going nowhere, the setup of the month appears and you can't take it. You're already fully deployed in garbage. You're monitoring noise, and the signal passes you by. This is the hidden bankruptcy of overtrading. You're not just losing money on bad trades. You're losing the capacity to recognize and capture great trades. You've traded opportunity for activity, and activity feels productive, but it's actually poverty. I need you to really sit with that for a second. The real cost of mediocre trades isn't just the money you lose or the commissions you pay. It's the opportunity cost. It's what you can't do because you're already doing something that doesn't matter. And most traders never see this. They're so busy being busy that they don't realize they're bankrupting themselves of the one thing that would actually change their account. Access. Access to the great trade when it finally appears. You're exhausted from overtrading. I know you are. You're taking 20, 30, maybe 50 trades a month, and at the end of it, you're barely profitable. Or worse, you're losing. You've been told that more trades equals more opportunities, equals more profit. But that's a lie. And it's a lie that's keeping you trapped in a cycle of exhaustion and mediocrity. The core pain you're experiencing right now is this. Overtrading is draining you financially, emotionally, and cognitively. Every mediocre trade you take dilutes your edge. It exhausts your discipline. It distracts you from the trades that actually matter. And here's the unique insight I want to give you today. Profitability doesn't come from volume. It comes from selectivity. One properly sized trade with genuine edge, held to its full profit potential, generates more wealth than 50 small trades where you're guessing, forcing, or just managing noise. The myth I need to bust right now is this idea that active trading equals productive trading. Wrong. Activity is often the enemy of profitability. The best traders, the ones who've been doing this for decades and are still here, they take fewer trades than you think, not more. What this video delivers is permission. Permission to be selective. A framework for identifying the difference between mediocre and excellent setups. And the emotional relief of knowing you don't have to be glued to your screen, taking every twitch in the market. And here's the reframe that changes everything. You're not missing opportunities by being selective. You're creating opportunities by preserving capital and attention for setups that actually matter. Think about that. Every time you skip a mediocre trade, you're not losing. You're winning. You're keeping yourself available for excellence. Let me tell you about someone I met years ago. I'm going to call him David. David was unusual. When I first encountered him at a trading conference, other traders were talking about him behind his back. They called him lazy. They said he barely trades. What's the point of having a trading account if you're not using it? And I was curious, so I approached him. I asked him about his approach, and he told me something I'll never forget. He said, "Mark, I take about 3 to 4 trades a year, maybe 5 if it's a really active year." And I just stared at him. 3 trades a year? How do you even call yourself a trader? But then he showed me his returns. And I stopped asking questions that sounded like judgments and started asking questions that sounded like curiosity. Because his annual return was better than traders I knew who were taking 500 trades a year. Better, with a fraction of the effort, a fraction of the stress, a fraction of the time commitment. So I asked him, how? What are you doing that they're not? And he said, I'm waiting. I watch the markets every day. I'm not lazy. I'm studying. I'm learning the patterns. I'm understanding the context. But I only trade when I see something exceptional. And exceptional means specific things to me. It means a structural breakout in an asset I understand deeply. It means a tight consolidation with volume starting to spike. It means some kind of fundamental catalyst that's going to push price significantly in one direction. When all of those things align, and I mean all of them, I enter with conviction. And then I asked him about position sizing, and he said, "I'm not reckless. I'm not betting the farm. But I'm not trading scared either. When I have conviction, when all my criteria are met, I size appropriately for the opportunity, and then I hold." That's the hard part, Mark, holding. Because these trades, they run for weeks, sometimes months. And there are moments where I want to exit, where it pulls back and I think maybe I should take profit, but I remind myself why I entered. I remind myself that I'm not here for the small move. I'm here for the big one. He told me that each of his trades typically runs 5R, 10R, sometimes 15R. And I did the math in my head. 3 trades a year at an average of 10R each. That's 30R annually. Most traders would be thrilled with 30R. And he's doing it with 3 trades, 3 moments of decision, 3 periods of management. Compared to someone taking 50 trades a month, that's 600 decisions, 600 management periods. The cognitive load alone is staggering. And then I asked him the question that I really wanted answered. I said, "David, how do you handle the boredom? How do you sit there day after day watching and not trading?" And he looked at me like I'd asked a strange question, and he said, "I'm not bored, Mark. I'm hunting. And hunters don't shoot at everything that moves. They wait, they track, they study the prey, and when the moment is right, when the shot is clear, they take it. And they don't miss, because they've been patient enough to ensure the conditions are perfect." That conversation changed how I thought about trading. Because I realized that David had something most traders don't have. He had clarity about what his job actually was. His job wasn't to trade. His job was to wait for the rare moments when the market offered asymmetric opportunity, and then to capitalize on those moments fully. Everything else was just noise. Everything else was just the market doing what markets do, which is mostly moving sideways or in ways that don't offer significant edge. Now let me give you another way to think about this because I think metaphors help. Imagine you're a chef, and you're trying to build a Michelin star reputation. You have 2 strategies you could pursue. Strategy A, you serve 200 meals a day. It's fast food style, quick execution, moderate quality. You're flipping burgers essentially, high volume, low margin, and sure, you're busy. The kitchen is always chaotic. There's always something happening. But at the end of the day, are you getting a Michelin star? No, because Michelin stars aren't given for volume. They're given for excellence. Strategy B, you serve 10 meals a day, but each one is extraordinary. Perfect ingredients sourced from the best suppliers. Perfect timing, perfect presentation. Every dish is a work of art. Every customer leaves remembering the experience. Which chef gets the star? Obviously the second one. Obviously the one who chose quality over quantity. And here's the parallel. Your trading account is your restaurant. Every trade is a dish you're serving. Mediocre trades are fast food. They fill time. They make you feel like you're working. But they don't build your reputation. They don't build your equity curve. One exceptional trade, held properly, managed with care, that's the signature dish people remember. That's what builds your account. And here's the deeper truth that most people miss. You can't serve 200 Michelin star meals a day. The attention required per dish makes it impossible. The care, the precision, the focus. You can't scale that to high volume. It's the same with trading. You can't give 50 trades the attention, the risk management, the emotional presence they deserve. But you can give 3 trades everything you've got. You can monitor them properly. You can adjust when needed. You can hold through the discomfort of normal volatility, and those 3 will outperform the 50 every single time. So, what makes a trade good versus mediocre? How do you know which setups deserve your capital and which ones are just noise? Because that's the skill, right? That's what we're really talking about. The ability to discriminate, the ability to say no to 95% of what the market offers so you can say yes with full conviction to the 5% that matters. A mediocre trade isn't necessarily a losing trade. That's important to understand. You can make money on mediocre trades sometimes, but a mediocre trade is a trade that lacks conviction. It's a trade where something is missing. Maybe there's no clear structural advantage. You're trading in the middle of a range instead of at a clear support or resistance level. Maybe the risk-reward is weak. You're risking 1 to make 1.5 or 2. That's not asymmetric. That's barely worth the emotional energy. Maybe the invalidation is ambiguous. You don't have a clear stop placement. You're kind of guessing where you'd get out if you're wrong. Or, and this is the most common one, you're forcing the trade because it's been too long since you traded. You feel like you should be doing something. You feel like you're missing out. So you manufacture reasons why this setup is tradable, even though deep down you know it's marginal. Here's the test. If you can't explain why this setup is better than the one you skipped yesterday, it's mediocre. If you can't articulate what makes this moment special, what makes this entry superior, then you're not trading edge. You're trading discomfort with inactivity. Mediocre trades exist because you're uncomfortable with doing nothing, because you've equated trading with working, and if you're not trading, you feel like you're not working. But that's backwards. Sometimes, most of the time, actually, not trading is the work. Sitting on your hands, preserving your capital, staying emotionally fresh, that's the work. Trading is just the brief moment where you execute on all that preparation. So what does a good trade look like? A truly good trade has 3 non-negotiables. First, structural clarity. The setup is obvious. It's not something you have to squint at or rationalize. Support and resistance are clear. Or it's a breakout from a well-defined consolidation. Or it's a trend continuation with a clear pullback to a moving average or trend line. Whatever it is, it's clean. If you showed the chart to another competent trader, they'd see the same thing you see. There's no ambiguity. Second, asymmetric risk-reward. You're risking 1 to make at least 4, ideally 6 to 10. This is crucial. Because if you're only risking 1 to make 2, you need a 67% win rate just to break even after costs. But if you're risking 1 to make 6, you only need a 20% win rate to be profitable. Asymmetry gives you breathing room. It gives you permission to be wrong more often than you're right and still make money. And that changes your entire psychology. You're no longer desperate for this trade to work. You know that even if this one fails, you only need to be right on 1 out of every 5 or 6 setups to come out ahead. Third, high conviction. This is the emotional component. You feel it. You're excited about this trade, not in a reckless way, but in a, this is what I've been waiting for way. If someone asked you, would you be comfortable sizing this trade at twice your normal position size, you'd say yes. Now, you might not actually do that. You might stick with your normal size for discipline reasons. But the fact that you'd be comfortable with it tells you something. It tells you that your conviction is real, that this isn't a marginal setup you're forcing. If a trade doesn't have all 3 of those elements, structural clarity, asymmetric risk-reward, and high conviction, then it's not good. It's acceptable at best, mediocre at worst. And here's the shift I want you to make. Stop asking yourself, is this tradable? Start asking, is this exceptional? Because tradable is a low bar. Most setups are tradable. You can find reasons to enter almost anything if you look hard enough. But exceptional is a high bar. Exceptional means this is one of the best setups I've seen this month. Exceptional means I'm genuinely excited to risk capital here. Now, here's a paradox that's going to sound strange at first, but it's absolutely true. You think that if you're more selective, If you trade less, you'll miss opportunities and make less money. That's what your brain is telling you right now. But the reality is the opposite. When you're more selective, you take better trades with bigger edge and you make more money. And there are 3 reasons why this is true. First, concentration. You can manage 3 great trades much better than you can manage 50 mediocre ones. Your attention isn't divided. You can give each position the care it deserves. You can monitor the price action. You can adjust your stop as the trade moves in your favor. You can recognize when something's changed and it's time to exit. You can't do that when you're juggling 50 positions. When you have 50 open trades, you're not managing. You're just reacting. You're overwhelmed, and overwhelm leads to mistakes. Second, sizing. When you have high conviction, when all 3 elements are present, you can risk more per trade. Not recklessly, but appropriately. If your normal risk is 1% of your account, maybe on an exceptional trade you risk 1.5 or 2%, and that amplifies your wins. 3 trades at 2% risk each hitting 6R. That's 36% return. 50 trades at 1% risk each averaging 1R. That's 50% return if you execute perfectly, which you won't. But the 50 trade approach requires 50 times more effort, 50 times more emotional energy, 50 times more decision making. The math favors selectivity. Third, psychology. When you're selective, when you're taking fewer trades, you stay fresh. You stay focused. You're emotionally available for the trades that matter. But when you're overtrading, when you're taking 50 mediocre setups, you're exhausted. You're depleted. And when the truly great setup finally appears, you don't have the energy to recognize it. Or worse, you recognize it, but you can't take it because you're already fully deployed in garbage. The paradox is real. Doing less produces more. Now, I need to address something because I think this is the root of the whole problem. Overtrading is not the disease. It's a symptom. The disease is discomfort with uncertainty and inactivity. If you can't sit in cash for 3 days without feeling anxious, you will overtrade. If you equate not trading with not working, you will overtrade. If you measure your productivity by number of trades instead of quality of execution, you will overtrade. The root issue is that you're trying to control the market's pace instead of adapting to it. The market doesn't produce high-quality setups every day. Sometimes it produces 1 per week, sometimes 1 per month. Your job isn't to force it to produce more. Your job is to recognize when it does produce one and act decisively. But most traders can't do that because sitting still feels like failure. Sitting still feels like you're missing out, like you're lazy, like you're not committed. But that's not true. Sitting still is the ultimate commitment. It's you saying, I'm committed to excellence, not activity. I'm committed to profitability, not busy work. And here's something else that nobody talks about. One good trade can psychologically reset you. 50 mediocre trades create this scattered, exhausted mental state. You're constantly in managing mode. You're monitoring positions, adjusting stops, checking prices every 5 minutes. You're stressed. You're reactive. But one good trade that runs, one trade where you enter with conviction, hold through the discomfort, and watch it hit 5R or 8R or 10R, that creates abundance mentality. You see what's possible when you're patient and selective. It rewires your reward system at a neurological level. You learn that patience equals payoff. And that learning, that deep, embodied understanding, it's worth more than any strategy. Because once you've experienced it, once you know what it feels like to take one exceptional trade and watch it fund your month or your quarter, you can't go back to the 50 mediocre trade approach. It feels hollow. It feels like poverty even when you're busy. The emotional shift is from, I need to trade to make money, to I need to wait for the right trade to make money. And that shift is everything. That shift is the difference between being a gambler and being a professional. Gamblers need action. They need to be in the game. They need the stimulation. Professionals need profit. And they know that profit comes from selectivity, not activity. Let me give you some math that makes this concrete. In investing, diversification reduces risk. That's true. But in active trading, over-diversification reduces edge. And here's why. Your edge isn't diversification. Your edge is selectivity and execution. If you're taking 50 trades, you're averaging down your edge. You're diluting the quality. Some of those 50 trades are genuinely good, but most of them are mediocre. And the mediocre ones drag down the performance of the good ones. But if you take 3 exceptional trades, you're concentrating your edge. You're only trading when you have maximum advantage. Here's an example. 50 trades at 1R average profit per trade, that's 50R total. Except that's assuming perfect execution, which never happens. In reality, you'll have slippage, you'll have commissions, you'll have emotional mistakes from being overwhelmed. So maybe you get 30R out of those 50 trades. Now compare that to 3 trades at an average of 7R each. That's 21R total, less than 30, but achieved with 1/17 the effort, 1/17 the stress, 1/17 the time commitment. And the 3-trade approach is actually more realistic because you can focus. You can execute cleanly. You're not exhausted. But here's where it gets really interesting. The 50-trade approach requires you to be right 55 to 60% of the time just to get that 30R. But the 3-trade approach only requires you to be right on 2 out of 3 trades, or maybe even 1 out of 3 if that one trade really runs. The bar is lower, the pressure is less, and the results are comparable or better. And then there's the issue of space. Good trades require space, capital space, attention space, emotional space, but mediocre trades crowd them out. You can't take the trade of the month if you're already managing 5 positions that are going nowhere. You're fully deployed. Your capital is tied up, but it's not just capital. You can't analyze a new opportunity properly when you're already monitoring 5 existing ones. Your attention is fragmented, and you can't be emotionally present for a new high-conviction setup if you're already stressed about the trades you're in. Mediocre trades occupy space, mental, emotional, financial, that should be reserved for excellent trades. This is why I tell traders, keep 50% of your capital available at all times. Not deployed. Available. Reserved for the one. The exceptional setup that only appears a few times a month. This forces selectivity. You can't overtrade if you've committed to keeping half your capital in reserve, and it ensures that when excellence appears, you have the capacity to capitalize on it. So how do you actually practice this? How do you train yourself to wait for good trades and skip mediocre ones? Because this isn't just intellectual. You can understand everything I've said and still overtrade tomorrow. So let me give you some practical tools. First, use what I call the one-trade filter. Before taking any trade, ask yourself this question. If I could only take one trade this week, would this be it? And be honest. If the answer is no, skip it. This single question eliminates 80% of mediocre trades instantly. Because when you imagine that constraint, when you imagine you can only take one trade, you become ruthlessly selective. You're suddenly not thinking about 20 different setups. You're thinking about the one, the best one, the cleanest one, the one with the most edge. Now, you're not actually limiting yourself to one trade per week, but you're using that hypothetical constraint to calibrate your selectivity, and it works. Second, use a 3-element checklist. Before entering any trade, confirm all 3 non-negotiables. Structural clarity, yes or no. Asymmetric risk-reward of at least 4 to 1, yes or no. High conviction, would I be comfortable sizing this at twice my normal size, yes or no. All three must be yes or you don't trade. No rationalizing. No close enough. This is your quality control system. This is how you filter out the mediocre setups that would drain you. Third, classify every trade after you take it. Win or loss doesn't matter for this exercise. Classify it as either excellent or mediocre. Excellent means it had all three elements. You had clear conviction. The setup was obvious. Mediocre means you were missing one or more elements. You forced it. You manufactured reasons. Track this over 20 trades. Then calculate separate P and L for excellent versus mediocre. And I promise you, you'll discover something. Your excellent trades are profitable. Your mediocre trades are break-even or negative. And suddenly, you'll have empirical proof that you're not bad at trading. You're just bad at filtering. And once you see that clearly, you can't unsee it. You'll start naturally filtering better because you've proven to yourself that selectivity works. Fourth, impose an artificial trade limit for 1 month. Limit yourself to 10 trades maximum, not 10 per week, 10 for the entire month. This creates forced scarcity, and scarcity breeds selectivity. When you know you only have 10 trades available, you become ruthlessly careful about which setups you use them on. You'll start seeing the difference between tradable and exceptional. And most traders who do this exercise realize they don't even use all 10. They only find 5 or 6 truly great setups. And their profitability improves dramatically because they've stopped diluting their edge with mediocrity. Fifth, implement a reserve capital rule. Never deploy more than 50% of your trading capital at once. The other 50% is reserved for exceptional opportunities. This ensures you always have capacity for the one. The trade that appears once a month or once a quarter that has everything aligned. And it prevents the trap of being fully invested in 5 mediocre positions when that exceptional opportunity finally shows up. There's also a psychological benefit. When you know you have capital in reserve, it reduces urgency and desperation. You're not scrambling to find trades because you feel like you should be fully invested. You're calm, you're patient, you're waiting. Now let me bring this full circle because I want to make sure you walk away from this video with absolute clarity. You've been taught that active trading is productive trading, that more setups equal more opportunities, that if you're not trading, you're not working. But all of that is backwards. One good trade beats 50 mediocre ones, because 50 mediocre trades drain you. They drain your capital through small losses and commissions. They drain your attention by forcing you to monitor noise. They drain your discipline because you're managing chaos instead of executing with clarity. And most importantly, they drain your capacity to recognize and capture the truly great setups that only appear a few times a month, a few times a year. The traders who build real wealth, the ones who survive decades in this business, they're not the most active, they're the most selective. They understand that trading isn't about filling time. It's about capitalizing on asymmetric opportunity. And asymmetric opportunity is rare by definition. It doesn't show up every day. It doesn't show up every week. Sometimes it doesn't show up for a month. But when it does, if you're available, if you have capital and attention and emotional energy reserved, you can capture it. And that one trade will do more for your account than 50 mediocre ones ever could. The shift you need to make is from quantity to quality, from activity to selectivity, from what can I trade today to what trade is worthy of my capital today. And most days, the answer will be nothing. And that's perfect. That's not failure. That's not laziness. That's professionalism. Because you're not here to trade. You're here to profit. And profit comes from patience. Here's what I need you to hear. You're not lazy for waiting. You're not missing out by being selective. You're not unproductive when you're in cash. You're doing exactly what professional traders do. You're hunting. You're waiting for your pitch. You're preserving your resources for the moments that matter. The market doesn't reward activity. It rewards accuracy. and accuracy requires patience. One exceptional trade, held with conviction through discomfort to its full profit potential, will teach you more about trading, about yourself, about patience and discipline than 50 mediocre trades ever could. Because 50 mediocre trades teach you that trading is hard, exhausting, and barely worth it. One exceptional trade teaches you that trading, done right, is simple, spacious, and profoundly rewarding. You don't need to trade more, you need to trade better, and trading better means trading less. It means waiting longer. It means letting go of the need to be constantly active and embracing the power of strategic inaction. That's where the money is. That's where the peace is. That's where mastery lives. If this resonates with you, if you've been exhausting yourself with overtrading and you're ready to embrace selectivity, leave a comment. Tell me, what's the hardest part of waiting for you? Is it boredom? Is it fear of missing out? Is it this feeling that you should be doing something? I want to know. Because naming the resistance is the first step to moving through it. And maybe your comment will help someone else who's struggling with the same thing. And if you want more of this, if you want wisdom that gives you permission to do less, to be more selective, to trade like a professional instead of like someone who's desperately trying to prove something, then subscribe. Because I'm not here to teach you 50 new setups. I'm not here to give you more complexity. I'm here to teach you how to recognize the one setup per month that actually matters. That's the game. That's always been the game. Thanks for watching. And remember, one good trade beats 50 mediocre ones. Not because the math says so, though it does, but because one good trade gives you space to breathe, to think, to be human. And 50 mediocre trades take that space away. Choose space. Choose quality. Choose one.